I think you're probably going to see some stability stay. And honestly, I agree with you. I did think we could potentially go below $40 as well. Not because fundamentals had changed that much, but we had a lot of, it's a lack of liquidity, momentum trading, algos kind of kicking in. There was a lot of kind of the technical factors that drove the last kind of $15, $20 lower. So yes, we have seen that stability. I think we've rebounded about $8, $9 or so. I think as long as the global economy isn't collapsing, we should be able to climb a little bit higher. But it is going to be very fragile because the biggest uncertainty right now is the trade war going on between the US and China, but also generally the health of the European economy. Demand doesn't look very good right now.
The factors that took it down, and you went through a few of them, and obviously the algo traders being an absolutely enormous part of that decline from $86 on Brent to the current levels as well. Why wouldn't they try and push it further in 2019? And you and I both know full well that current daily consumption hasn't changed. It's still somewhere between, I guess, 98 and 100 million barrels a day. Despite all this oscillation, projected demand has come off a little bit, but not massively. Why wouldn't we test the downside a little bit further, Amrita?
I think the biggest issue with December was that we've had so much volatility, not just with regards to prices, but just news. Waivers, yes, no, China trade war, yes, no. People just didn't want to take a position. I've spoken to so many hedge funds and our client base, everybody would say to me, oh, this is very low. These prices are very, very low. But nobody would want to buy it just because, it's like catching a falling knife. But in the new year, new budgets, and I think people will say, okay, fundamentals don't look that bad. To your point, demand hasn't actually collapsed yet, at least. And the OPEC cuts should start to be felt soon. Even non-OPEC at these price levels, US production growth is slowing down quite significantly, which weirdly enough, if the economy doesn't collapse, sets us up for a very strong H2.
Amrita, just a very brief question. If we get a negotiated trade settlement between China and the United States, does China go aggressively back into the market to buy up US oil?
I think this is going to be a very tricky decision just for two reasons. One is this negotiated deal, there needs to be confidence that this is going to stick. I think part of the problem with the 90-day truce has also been that people just don't have the confidence that this will morph into something proper. So if it's just another 90 days, I don't see them going back. They have gone back in small volumes. I just don't expect them to go back to those kind of crazy record levels. The other thing, I'm sure everybody's been following, Unipec has had huge losses. Their head of trading has also been let go. And I think generally, and they were the most aggressive buyers of US crude. And I think generally there'll be a lot more cautiousness within China and their systems about how they play this going forward.
Amrita, it feels as though there's a lot of algorithms at work behind the scenes on a number of the different parts of the market. To what extent do you think the sell-off in oil has been exacerbated by the trade story with algorithms trading around a lot of that noise and selling off key positioning?
Oh, I would say, when the waivers were given, we thought prices would correct, but let's say from 85 go down to 75, maybe 70. And yes, with a little bit of a demand wobble, even 65, I could see that. But anything below that has definitely been algorithms, but also you had the Pemex, Petrobras hedges, so a lot of negative gamma in a market which had no liquidity. So I mean, at least $15 if you had to ask me to put a number to it. So yeah, it's been pretty significant.
I mean, it seemed to me that everyone thought that oil was a one-way trade when you had the Iran sanctions coming up, and then when people were surprised by those waivers. And so it was more a fear of supply tightness. And then at the same time, you had the Saudi guilt after the Khashoggi murder. And so it seems like we've gotten to the stage now where the suppliers of oil are probably more willing to focus on raising the price at the margin. So is that a fair assessment that as we find equilibrium, it's likely to be higher here just because we were oversold?
Oh, yeah, I mean, absolutely. But I think the question is, how long does it take? Because, just doing all the balances at the start of the year, I don't think supply will be the reason if we end up being oversupplied. I mean, OPEC's cutting, US production is not going to grow as much. So I think that's in check. If we end up being oversupplied, it's going to be because demand has fallen a lot more. Or the market can actually end up being quite tight because demand turns out to be okay. But yeah, absolutely. At current levels, based on current fundamentals, the market is oversold. But it doesn't mean that it's going to correct straight away, right? It can still take some time unless and until you have the clarity, particularly with the trade talks over today and tomorrow.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.